Hello, everyone. Today, we're going to talk about cost estimating techniques. This is chapter 2, and this chapter 2 is available on D2L. So if you go to the D2L, and it is provided, I believe, on week 1, both chapters, chapter 1 and 2. So in the first chapter, what we talked about financial statements. And these financial statements will help you to identify the financial status of a company. Are they making money? The bigger picture. Are they making money? Are they losing? How much they owe for banks in terms of loans? What is the interest from the public in investing in that company? Where the money is coming from in terms of the cash flows and these kind of things. So we did talk about that in chapter 1, and hopefully you guys are able to read a financial statement. Not only read the financial statement, but also you can develop a financial statement with the 3 types. So today we're going to go into more details with the financial estimations techniques. And the first thing that we need to talk about it is type of cost or cost classifications. There are generally 2 types of cost. One is a fixed cost, which is, this is a fixed cost that is not changeable. It does not change with the output. For example, rental, insurance, utility bill, all this could be considered as a fixed cost. And why is it called fixed? Because it's not changing with the quantity that you're providing or producing. And no matter what, whether you produce 1 unit or 10,000 units, you still have to pay the rent. You still have to pay the insurance. You still have to pay salaries for your employees and so on. So that's what is considered as a fixed term. As long as it's not changing with the quantity that you're making or the service that you're providing, that is considered as a fixed term. The other type of the cost is called variable cost. And this is called variable because it's vary with the output. It changes with the output. So the more you produce, the more cost is needed. And that could be considered as a material cost, labor cost, and advertisement. So if we look into this chart right here that you see in front of you, you will see that the fixed cost as a constant cost, that's right there. The gray line right here, it's the variable cost, and which is vary with the quantity and the output. And now, in order to find the total cost, you add both these together, and that will result as this orange-yellow line showing the increase of cost with the quantity because we considered the variable cost. So if we need to write an equation for the total cost, that would be the total cost is equal to the fixed cost plus the variable cost. And the variable cost would consist, will be calculated by multiplying the cost per unit times the number of units. All right, now we're talking about another thing related to the total cost. We're going to talk about revenue and profit. So what is revenue? Revenue, it's the money generated from business activities such as selling products or providing a service in a specific period. So this is in a short term. These are the sales, how much you're selling per month, per year, per week, whatever the period is you're specifying. So revenue is equal to the selling price times the quantity. So for example, if you sell 10 units and each unit would cost $10, so 10 times 10, that would be equal $100. So again, I did say the cost. I meant the selling price. One more time. The revenue would be calculated by the selling price. Let's say the price for an item is $10 and you sold 10 of these. So you generated a sales of $100. Now, if we're talking about the profit, or what's called the gross profit or the gross margin, this is the money kept for the business after paying the cost, the expenses. And that would be calculated by using the profit equal to the total revenue minus the total cost. All right, so I hope you guys had these 3 equations written down. And now let's go ahead and take an example on how we could calculate the net profit in this case study. So we have this example where a company is selling computers and DVDs, and they want to find out what is the net profit over the 4 weeks. And what the sales department did, they provide this data to you and they ask you, can you help us find the net profit in this case? So in week 1, they've sold 10 DVDs and 2 computers. These are what they sold. In week 2, they only sold 7 computers. In week 3, they sold 90 DVDs and 5 computers. And week 4 is 10 computers and 70 DVDs were sold. So also they provide us with this information. The fixed cost is $1,000 per week, considering the rent, the insurance, and other things, the utility, that's they estimated to be $1,000 per week. Also, they provide the variable cost for the DVDs as $50. The variable cost for computers is $165 per unit. The selling price for the DVDs are $220 per unit, and the selling price for computers $280. So what I want you to do, I want you to open an Excel sheet. I'm going to stop this one here. I want you to open an Excel sheet and I want you to write these information down. And then let's go ahead and start analyzing and finding the net profit for this case. So I'm going to share Excel here. So that's the Excel sheet. So these are the information taken from the question, as I shared with you on the slides. Now, what we need to do, we need to consider 3 things. We need to find out the total cost, which is considered from, or we can be calculated by the fixed cost and the variable cost. And also we need to consider the third one would be the revenue, the sales. So let's go ahead and start with this equation right here. Net profit is equal to total revenue minus the total cost. So let's go ahead and start with the first step, which is the total cost equal the fixed cost plus the variable cost. So what we have the fixed cost to be $1,000 per week, and we have 4 weeks, plus we've sold 170. If you add how many DVDs we've sold 10 right here, 90 here, and 70 right there. That would be 170. Cost for each one is 50. And for the computers is we've sold 24 of these. This is coming from 2 in here, 7 here, 5 here, and 10 on week 4. That will make it 24 computers has been sold over the for the past 4 weeks. And so that will give you a total cost of $16,460. All right, now I understand I did use some parentheses here, and you might not able to use it for any different reasons. So what I want from you, I want you to break it down and go step by step. So what I did here, I did say the fixed cost is equal. So I started with the equal sign, 1,000 times 4. And then variable cost would be 170 times 50. And then that's for the DVDs. Variable cost for the computers, 24 times 165. And we found out what would be the cost. So the total cost, adding these together, and that will give you 16,460. And now moving into the next one here, what we could see that there are the total revenue. Now what we need, again, we're done with the first part, which is the total cost on this equation. Now we need to find out what would be the total revenue. The total revenue, I divided also into 2 steps. One, total revenue from selling DVDs, and the other one is a revenue from selling computers. So 170 times 220, and then selling computers 6,720, and this is coming from 24 times 280, and then the total revenue would be 44,120. So now the last step is to subtract the revenue, which is C19 I have in my sheet, minus the 16,460, and that will give you a net profit of 27,660. All right, that's what they're making based on what the data given to us. One more thing that I want to mention, that when you provide your information, you have to organize your information. So do not provide me information looks like this way. So I'm going to hide. This is what I receive from my students. Basically, I receive numbers that does not make any sense. So Please do not do this when you go and present your financial reports. When you have a proposal, make sure you make it clear and easy for people to understand what these numbers are. But honestly, this is what I received from my students on assignment. They send me a file, an Excel file. They did a great job. Honestly, they know exactly what they're talking about. They do the calculation. They've done great. And I might know what is this information is. But however, what I want you to do, I want you to take an extra step and make sure to use the borders to highlight a section of your data. I want you to use the highlighter as well, where you could fill a color for a cell, and this way you have a better presentation for your data, and people would understand. So they know there's a label for each one of these numbers here. So they know that the 4,000 is the fixed cost, the variable cost from DVD would be 8,500, and so on. So there is a label for each of these numbers, and this will make it easy for people to understand, and this will make it more easy for your proposal to be accepted by other people. All right, so that's all for today, or for this video. We will be doing another video on the next topic of this chapter. So there will be a few more additional videos for you to view. Please let me know if you have any question. Thank you very much.